Hello everyone. So today I recorded my trading session, except that I did it on my Chromebook, and there's no audio since I was at university studying. So it's 2 hours 41. I have it on 2 times speed. I'm gonna talk through it, and I did take a trade today. I got stopped at break even, and I want to talk about as we get to that trade. I'm gonna speed through this. It's not gonna be 2 hours long or whatever, double that time. I just want to speed through this, the important parts, because I don't really touch much. I'm mostly studying during this, so I don't really put any text or anything. But going into the day, right, we had NFP, which drew lower down to some daily levels I was watching. Those are daily order block. And so you have that level, which right now I'm in a position where, okay, 9:30 opened up. I want to see what the first 15 or 30 minutes want to do. So we'll skip ahead a little bit. This is where I log into my account, and so I marked down those daily levels, right? You see it, the daily order block, right there. So it was invisible in the lower time frame, and then I'm just marking those higher time frame levels so that it's visible on the recording. A lot of times I see levels and I don't mark them. It's a good habit to mark them, and yeah, so I mean, I'm not always showing everything that I'm seeing, but I try to do so for the future recordings when I look back on them. So here I'm noticing that 15-minute fair value gap, right? There's also a 5-minute one, but I don't feel too comfortable longing on it. So I'm just looking at the 15-minute chart, and I want to see here if we're going to create an order block. Now, another thing too is that buy side liquidity. The way I'm marking that buy side liquidity, we're way beneath the midnight open, so seeing an order block here would not be favorable. But hold on, too many things happen. The way I'm marking this buy side liquidity, I'm ignoring this big wick. Even though that wick traded above this high, I don't care about that wick. I'm pretending like it's not there. And we have relative equal highs here, and we have the high there. So I'm looking for longs right here. However, because we had such a big drop and we don't have any market shift and no real turtle soup, but we have a turtle soup with that low, but it's very spaced out. And so I'm not really trusting this too much. It can work because it's NFP. It dropped down there really quickly, and it can move back up against this range very quickly. But I'd rather just let it go by. And I do want to see this buy side liquidity return to one more time and see the bodies get closer to that level or above that level. Yeah, so let's wonder if I pan, if it'll. So this is where I type I would like to look at trades. We'll move forward a little bit. Would like to look for trades for premium levels. Right, so I want to trade up to the highs, even though that's the bias. I'm not just buying off the impulse. I'm not just buying and saying, well, I know it's going to go up there. No, because I have a specific model I'm waiting for to look in before getting into a long. And the premium levels, those are either relative equal highs or it's the buy side liquidity up here. So we'll move forward a little bit to where price starts to draw higher. Okay, right here, I'm drawing this order box, what I was talking about earlier with 3 question marks. All right. Why is this not an order block? Even though we looked like we were forming an order block, why would this not be an order block? If I'm wanting to go short here, and I think that this is a change in, say, delivery, maybe there's some inverse fair value gaps on the smaller time frame, right? As this order block seemed to be created, right? Like with that down close candle, like right there, there's a big fair value gap there. That's an inverse. That could be an inverse fair value gap once we close above that. And I know these things. I know that I could look for longs here. Again, I said I could look for longs, but I'm not comfortable doing so because there was no turtle soup that on the 15-minute chart that I liked. So I look at the 15-minute chart. I want to see order blocks, turtle soup on the 15-minute chart, one of the two. I don't like to just look at straight naked reversals like this. I usually want to see a turtle soup or an order block form, but that 15-minute candle, if we go back to it, it took zero liquidity. It didn't take out any highs. It just traded back into this big gap, which doesn't really tell you anything, right? The order block I would have wanted to see for a change in state delivery would be the NFP candle. And once we get up here, we're in a premium. So I'm no longer looking to go long up here, which means that the only other thing I could look for to go long is a turtle soup on the 50-minute chart, or I don't know, but there's none of that. But I go back to the 15-minute chart because I know that there's probably opportunity to look for trades, but again, I'm trying to just remain looking for plays that I'm confident with, and so I'm allowing it to work, and I'm just observing it from the higher time frame, the delivery from the higher time frame. So I'm not tempted to go in and look for things. But and when I go back on that smaller time frame, I see once again we expanded, and we're creating a new fair value gap there. And again, this is me. I want this to be a reclaimed order block. So I'm not saying that this is going to resist price. I want this to act as a reclaimed order block where price is going to close above, and it's going to use it as support. That's what I'm signifying here. That's what I'm saying here. And then I go down to the 15-second chart, and I refine that level to a 15-second fair value gap, which I would have wanted to real quick act as support once we get above it, and then not really come back down beneath it. But because today was a very slow and poor day, this is just me looking at the news, it ended up consolidating around that 15-second fair value gap a whole lot more than I would have been comfortable with. And so yeah, there's price running off a little bit. You see how we closed above that 30-second gap. We came back into it. So that could have been a good opportunity for somebody, but not for me. This is a balanced price range I'm watching. This is somewhere that if price gets into this balanced price range, that BPR, it's going to be heavy resistance for a little bit. Could, if we're in a seeking to short environment, could send price on a bigger retracement. So price retraces a little bit, and this is where it starts to consolidate. And I'm still remaining on the 15-minute chart because I'm studying the higher time frame delivery. I want to see something on the 15-minute chart that would then lead me to want to take a trade. There are many things I could look at on the 1-minute or 5-minute chart that could lead me to look for these short-term scalps, but I'm mainly a trader coming from the 15-minute chart, and that's where I'm looking for the highest probability moves inside of a day. And simply right now, there is none. So then I noticed that, okay, go back on the 15-minute chart here. So I see that we are failing to get above this up close candle. And when I'm on that 5-minute chart, this looks a lot like it could be a breaker, right? I'm not saying it is here. And I say that I don't like shorts here, right? Even though it looks a lot like a short, this is like a pattern. Okay, this would be a pattern trader would look for shorts here. But I know the logic is the significant liquidity is not anywhere close to here. It's up there. And I'm seeing this here, and then this looks really good. It looks like there's an inverse fair value gap set up. It looks like we're going to use this 15-second gap to go lower, and we're using a fair value gap here to go lower. And we might use that inverse fair value gap there. And then run back one more time on the 15-minute chart to make a new low. And then that could maybe give us an entry to go long, right? But because that would be against the overall draw, the more significant draw, which is higher, I'm not looking to take that. If it happens, it happens. That's good. It'll give me another opportunity to go long. But if it doesn't happen, then I've learned the hard way to just stay out of those kinds of moves. This is simply just a small retracement in a condition where price was slow and hard and or high resistance to get up to the highs. It wasn't really moving well. It was coming back a whole lot and consolidating a whole lot more. And that's all that was happening here. So there was no reason to look for long or shorts right there. And price ended up rejecting a little bit. Still, this is all in this consolidation. This is what I mean. And I actually thought of, when I thought of going short and I saw this consolidation, I was like, wow, I'm glad I didn't go short, because this shows me that, well, if you really just wait until everything is just easy, everything is one-sided for you, and you don't just take the littlest thing that maybe you're going to be right, well, then it becomes a lot easier. And even still here at this point, this is a fair value gap here that, I'm not moving my mouse here, and I'm looking at chart every now and then. This is why I was mostly on the 15-minute chart too. And at this point, I know that until we really start to move out of this consolidation, I'm not looking to take anything at all. And so I'm mostly on reading my book, studying, and adjusting the price levels or the chart or the time frame every now and then. And I should have taken out that X, but I kept it there basically all morning. That X is usually a turtle soup, so that was just me showing how it was like a turtle soup pattern, but I wasn't trusting that pattern. Okay, so still just me on the 50-minute chart, just waiting until something happens, until we're out of this consolidation. And I'm going back in the small time frame here, and I'm saying, oh wow, price is still consolidating. It's still in this consolidation, and I go back, and I'm still looking at buy side liquidity. And this is me just looking at the dollar. I didn't look at the dollar actually how it closed today, but this is the only time I looked at it, other than in the pre-market in the morning. So now we're starting to break out, and we're going back towards its high, and I'm seeing this, and I'm like, okay, well, there's another trade on that short-term high. Are we going to reject from here? Are we in a seek and destroy environment, or is this where we really run somewhere significant? And now we get above midnight open, so that's starting to look like a really significant run higher. And throughout this whole time, I'm thinking, all the people are selling off this order block are going to get stopped out at these relative equal highs. All the people that went short on NFP probably put their stops at the relative equal highs. Don't just look at that line, look at the bodies where they are. They're all relatively equal. So people trading the line charts, or there's certain bar charts that work with, they look like candles, but they work with the open and close. They don't use the high and low. These people are using the open and close of the candles as liquidity too. So the algorithm doesn't just seek the wicks, it seeks relatively equal prices or spaced out prices that are visible in multiple time frames. And when you have a wick like this, yeah, it's spaced out, but it went there so quick that it's likely going to return so that it can bring more liquidity, because people see this, they see price trade to this buy side liquidity at this big wick, and that gives the impression that there's still a lot of people selling price here. So when we come back at this level, what are more people going to do? Well, they're going to sell this level, right? Once they get stopped out, once it goes above this and it closes above this level and it closes above the buy side liquidity here, the resistance level people are looking at, well, if it closes, it doesn't have to close above the wick, but it just needs to close above the main believed to be buy side liquidity, which is the higher time frame highs from back there. Once it does that, people automatically start to get stopped out of their shorts, or they sell their shorts, or they'll get into longs because they'll think price is breaking out. But the mistake here is that we're in a premium. We're way in a premium, right? This is the high of the day, so we're not going to break out. We're not going to go any higher. We're going to instead reverse and move back into the range from today. So that's what's going to occur. And yeah, so I mean, it's in price's favor. It's in price's. It's a benefit for price to go back to this area because it just brings more liquidity into the market, right? All right, so here's the 15-minute chart. I'm waiting for a close above that buy side liquidity. So now I'm saying I'm open to shorts because we've hit that buy side liquidity. And what happens next? Price starts to go lower. However, there's still Thursday's high. So even though this is the relative equal highs from this morning, there's still Thursday's high, which is another buy side liquidity level that we could reach for. And I'm looking at this here and I'm seeing these fair value gaps. I'm not immediately inversing because there's still higher time frame fair value gaps that we did inverse, like this NFP range. And so I'm before I look to do anything, I remember I look at the 15-minute chart. So let's go ahead and skip to where I go on the 15-minute chart. So no 15-minute CSD, no trade. So this candle here, the immediate candle after taking buy side liquidity, did not create a change in the state of delivery. So I did not look to trade, right? Now this is where, even though I said that, I actually still did try and trade. And I shouldn't have, right? But according to what I was saying, I had the trade. Leading up to the trade, I was definitely not confident because it was against what I sort of thought would be likely to happen. Well, not likely, but I was making a case for this coming trade not to work. So it was more like a gamble that I did. But I managed it well, and I got stopped out at break even. So here's where I'm thinking that we might change the delivery, and we might create an inverse fair value gap here once we close down here and come back to that level, and then we could continue going lower, right? But because we still have relative equal highs, this is something I might have missed on the 15-minute chart. Look at the wick, just went above where the bodies are still underneath these bodies, so this is still all relatively equal. And price, even though it could keep going lower, price is still going to want to gravitate back to those relative equal highs because there's still liquidity there. There's still people willing to speculate when price gets back to those relative equal highs where the bodies are. So now let's go forward a little bit. So you see where the candle closes, it just doesn't actually create a change in the state of delivery. So I don't know why. The change in the state of delivery is when these up close candles stop acting as support. Now, yeah, it did stop acting as support, definitely. It's way underneath it. But algorithmically, if we're not just going to look at this up close candle, we're going to look at all these up close candles that are consecutively up close, because this on the higher time frame is one big up close candle, right? This is a 15-minute chart, so you have like this one down here, that one, and maybe you have on a 30-minute chart or a 45-minute chart, a couple different ones. So when you see consecutive up close candles, you want to treat it as one whole candle, and that price is far from closing beneath this low, and didn't even close beneath that low. So the bodies so far have not shown a change in the state of delivery. And I'm right so far on not wanting to trade. But when we get back up here, I kind of decide that I want to try and look for something. So initially I'm looking at this area and I'm saying, okay, maybe not. And then it continues to go higher. And okay, this is where I see this area and I'm like, okay, it could find, this is the last fair value gap. It could find resistance here. Okay, and then watch what I write next. Maybe you missed it. Okay. I said I don't like how the 15-minute chart looks. I'll study this one. Okay, so yes, I am anticipating a move lower. But I said I'll study this one. Now, why wouldn't I like this? Obviously, I'm seeing the change in the state delivery did not occur. The body stayed above this candle, and we didn't really create a 15-minute order block like I wanted to see. The bodies also did not get above buy side liquidity. So even though like this is clearly, I'm looking at this right now, if I'm back testing and I'm saying this is a no trade, like I would not want to take this in a live setting, I still want to go ahead and take it. So there's a big fair value gap that leads up to there, and it's very believable how that could be a trade. And it's the same scenario from earlier in the morning where I focused on the 15-minute chart because I knew that there would be things on the smaller time frame that could lead me to take a trade, but that would be lower probability. So it's the exact same thing here. There were things on the smaller time frame that led me to take a trade, but they were lower probability. And so yeah, I said I wanted to just study this one, but I saw this and I'm like, no, it looks too good. I'm gonna just try it. So I got in with 5 micros because it wasn't really high probability. Alright, so I'm in this trade and I start to tighten my stop here. Like I'm moving my buy stop down. Yeah, I'm about to at least. And the reason why is because I knew that it was very low probability. I knew that I was really just trying to get lucky here, trying to catch a win and make some of what I lost this week back. And so I'm tightening my buy stop more and more because as I see it start running, I'm looking at myself. I'm like, okay, if this is gonna work, and by the way, I was not gonna hold till that 40 points, but I'm saying that if that was gonna work, if that was going to work, this trade, it should not want to come back into this fair value gap. It already filled it completely. It's now created a new low. It shouldn't really want to retrace. I want it to really expand lower. That's the only way I would want to hold on to that trade. So the buy stop is quickly break even as early as possible. And I made just about $4. So nothing really exciting, but I got stopped down. There you go. And then I continued to study price. I was gonna stop the recording, but I continued to study price, and no surprise, I got stopped out. So I shouldn't have taken that trade. I should have just studied it. I did end up studying it, but I did enter the trade initially, and that wasn't okay. But then price just continued to run higher to the buy side, and the afternoon was when there was an entry. Right. So, anyways, that was the trade today, and I'll have more to speak about that trade and so like the challenges I went through, because it has to do a lot with Tuesday. And I think if I just use Tuesday, I'll talk a lot about Tuesday on my weekly review and how I felt there, and I'll show my loss and everything. That will make a lot more sense as to the challenges, to enlighten the viewer and my future self on the challenges I went through trading this week. But this week was rough. One of the worst weeks I've seen price. Well, almost every NFP week is pretty bad, to be honest. Except for Mondays. Mondays are always nice on the NFP weeks. So, anyways, with that being said, thank you very much for watching. I hope that this was insightful to some. And yeah, we still have the account. We're still good, and I'm excited for next week.